Hey, how's it going, everybody? Michael Lamar here from Wall Street IO, the #1 backtesting engine for swing traders. With a quick update for you today, we're going to talk about Apple's move on Friday, and a little bit about seasonality and what to expect this time of year. Now, for the last month or so, Apple has actually been making a small uptrend, which we've been discussing in these videos. So if you take a look at the stock, you can actually see that the stock has been making higher highs and higher lows. I'm currently looking at a daily chart using the Heikin-Ashi chart. The Heikin-Ashi here, you can see here, helps me visually see what I call a payday cycle. Payday cycles are 4 to 8 day trends in a stock that I use the Heikin-Ashi to see. You can see it's a little bit different than your candlestick. Here's your candlestick. Here's your Heikin-Ashi. Okay, I like Heikin-Ashis because, again, it's very visual and it helps me see trends. Now, when you're looking at this chart, you can see today's day 3 of a bullish payday cycle on the Heikin-Ashi chart. Now, what's important is we started this cycle actually on Wednesday. However, Thursday we formed a lower high, which is generally thought of as a slowing momentum signal. However, Friday came out strong and actually closed above Thursday's high. Now, that's a good signal for the bulls. Anytime we make a new daily high and close at a new daily high, generally thought of as bullish momentum. Now, we still have a over-under area right around 173.25 that we need to get over this week to continue this bullish momentum. If we do and we can get above and stay above 173.25, next target would be about 175, 176, and then 180 above that. Now, if we cannot get above and stay above 173.25, then we may be stuck in this sideways grind that we've been in. Now, when we take a look at the MACD has been crossed to the bulls and trending higher for the last month and a half. And generally, when that's the case, we tend to have longer bullish payday cycles, which is basically what we've been having. Now, if you take a look at the MACD, you can see that it's still crossed to the bulls, but for the last week, it's been going sideways. Now, during sideways phases of the MACD like this, we're late cycle in the MACD phase, right? Because remember, MACD tends to cross for about a month. After a month, you're kind of late cycle MACD. When the MACD is going sideways like this, in many cases, we have a stock that either pulls back or compresses. And that's basically what we've been seeing here. Now, I've got a thought that I wanted to experiment with today, and that's this. If the stock continues to make new daily highs and close at new daily highs, we might see a MACD that's been stalled here stay crossed to the bulls and continue higher. If that happens, we could see what we would consider to be a double MACD cycle to the upside. Occasionally that happens. Here's an example of a double bearish MACD. We had a MACD cross for about a month, and then it looked like it was going to cross back but didn't, and then it ended up crossing down again for another month. This was a double bearish cycle. It happens, okay? And I'm wondering if we continue to have bullish momentum here, if we could see that in Apple. Now, again, we need to get above and stay above 173.25 and then 175, and then we'll be looking at 180, and then we can reassess. And if we can't get above those levels, then maybe we will kind of snap back or pull back a little bit. Now, a couple other things to consider. Right now, if you take a look at Seasonality, which is a tool here on Wall Street IO, generally, this time of year in February and March, they're generally good times for the stock. And then we have a slowdown in April. So let's do a thought experiment here together today. If we're almost through February, we've been bullish, which we normally are. If we can continue this momentum through March, which is another month, which would mean that double MACD cycle, which remember each one lasts about a month, then that would take us to about the end of March. March may not be as bullish as February was, but hopefully we get a little bit of traction. And then at the end of March, we see our normal April pullback. So those are some things that I'm going to be looking for, but again, I'm going to let price determine that because we really need to get above or below these over-under areas that I'm showing you for today. Now, when we take a look at the last few payday cycles, which we can do here on Wall Street AO by clicking on Backtest, by clicking on Payday Cycle, we could actually see how well the strategy has been performing. Now, one of the cool things we did at Wall Street AO is we give people the ability to, with one click, backtest things like Payday Cycle strategy, like RSI, like stochastics, like a moving average cross, or the MACD, or ADX, and to view the results right here. So when you look at the normal payday cycle strategy, it's got a 1.8 risk reward. That means you're making almost 2 for every win and only losing 1 for a loss. That's a good risk reward. And a 54% batting average. Now this batting average can be improved a lot because over the year you can see you have about 31 trades a year. It's a very active strategy. However, what we've discovered, and many of you know this, is that when the MACD is crossed to the bears and trending down like it was here and like it was here, we generally have smaller bullish payday cycles. In fact, they're more likely to be pump fakes. And if you look here at the chart shading, which shows you when you had a profitable trade and when you had a losing trade, many of these losing trades over the last year happened when the MACD was really bearish. And as soon as the MACD started to go bullish, which you could see happen at the beginning of the year, as soon as that happened, we started to have a lot of winning trades again. In fact, since the MACD has been bullish, we've had 1, 2, 3, 4, 5 winning trades in a row with the payday cycle Heikin-Ashi chart. That is just a small example of how you could use the MACD in correlation with payday cycles. Because a lot of these losers, again, happen when the MACD is really bad. So those are the times to avoid. So as a quick update for everybody who's new, we just published the Payday Cycle Masterclass Episode 4, Module 4. So if you want to click the university icon here, scroll down to Payday Cycle Masterclass 2nd edition. Scroll down, you now have the success framework. This is going to show you how to use our platform and the strategy results to improve your ability to gauge profit targets, manage risk, and help you position size. It's going to show you a lot about getting in and out using the Payday Cycle strategy. So again, click on University, click on Payday Cycle Masterclass 2nd edition, and go ahead and take a look at it. It's going to really help. So I hope you enjoyed this quick video. This is Michael Lamar, and I'll see you on the inside.